The Bank of Canada recently announced an interest rate drop. We are seeing graphics that show 2.25% splashed across social media. But what does that mean for someone looking to buy a home? Tony Monteiro is a realtor and mortgage agent, so the perfect person to talk about this and really break it down. So, Tony, we want to give real examples. We're going to do that. We are going to show a house. We're going to go through the numbers in just a moment. But first up, 2.25%. We're seeing it splashed everywhere, but that's not a mortgage rate. And someone said to me the other day, "Do you see the mortgage rates went down to almost 2%?" That's not how it works. Can you explain?
Absolutely. So that 2.25 ubiquitous number that we keep seeing everywhere is what's known as the overnight rate from the Bank of Canada. You and I and any other borrower will never be able to borrow at that. That is the rate that basically banks charge themselves if they're borrowing money. So the real rate that we look at is what we call the prime rate that the banks charge their customers. So, for instance, it just went down by a quarter point, and it was at 4.7. So now we're at 4.45. That is the true prime rate that customers will get charged. Now, banks will take that rate, and depending on the financial institution and depending on the individual's credit borrowing, you can get as much as that 4.45 minus a half a percent, minus 0.6%, and that will be your mortgage rate. But understand, what goes down can also go up, and what goes up also comes down. You've got to be prepared for that.